Hello and welcome to this Corporate Corridor special with me, Taha Siddiqui. Now, the IMF additional loan package is in, and not only has it stabilized Pakistan's reserves position, it has managed to avert Pakistan's balance of payments crisis. But with this loan coming in, Pakistan strictly has to abide the tough and difficult conditions imposed by the IMF. To discuss this, we have with us Mr. Nadeem, Naqvi financial analyst, and Syed Javed, Hasan, CEO for IGI Investment Bank. Gentlemen, thank you for being a part of our program.
Thank you.
Now, starting with you, Mr. Nadeem, the loan package is in. Pakistan has averted the balance of payment crisis. Additional loan was also provided by the fund. How long is the economy going to be dependent on foreign fund houses to rescue us?
Well, in the last 60 years, it appears that we continue to be dependent on foreign funding. For the lack of anything else, we somehow do not seem to have developed the internal capacity for a self-sustained economic growth and self-sustained financing package for that growth. As long as that structural issue is not addressed, we will continue lurching from crisis to crisis. In fact, the last time we were in IMF program and we successfully came out of it, the economy had at least come to touch the critical fundamental basis which allowed it to grow for 5 years at a good rate. The quality of that growth can be debated, but it did grow and generate incomes and employment. We are back there now. So I think the issue is not so much the current IMF situation, but what do we do with the breathing space that this provides us as a country, as the politicians, as the bureaucracy, as the planners, and also the leaders of industry. What do we want to do in order to become self-sustained economy in terms of a balanced growth?
So are we lacking somewhere from the policy, as far as the policy makers are concerned, and proper measures? Are we lacking from that end?
I think IMF itself has spelled it out very clearly that the most critical factor is lack of revenue generation. Our tax to GDP ratio of 9% pales in front of India, for example, which is a high population country at 18%. And most of the Far Eastern economies have well in excess of 20%. So until unless we get out of this mentality that I have been born here, so I deserve everything, but I won't pay a thing, I think this mentality has to change.
Definitely, and somebody has to ensure that this mentality changes as well. Coming to you, Mr. Javed, now this fund is in. They did help Pakistan out with an additional loan as well. Is it safe to say that we as a nation are at a safer, in a safer position with this loan coming in?
I think we're definitely safer. Whether we are safe, that's a different issue. But just going back to the earlier question about structural need for IMF loans and the conditionalities they impose. The conditionalities very often are a necessity. They basically are nudging the policymakers to bring about the structural change that are probably necessary for our long-term sustained growth. One thing we have to realize in Pakistan is that we are not an export-led economy. We are not generating sufficient exportable surpluses to generate those foreign currency surpluses that you see in countries like China, for instance, and Japan during its growth phase. We don't have that. We need the foreign funding, whether it's through FDI or whether it's through loans in the form of multilateral agencies. We need that. That is something which we may need for quite some time until we become the kind of economy we are generating sufficient export dollars. Given that condition, we need to create an environment where there is sufficient long-term investments coming into the economy. Now, when you ask about being safer or being safe, that's critically important. First, we need to create an environment where there is a relatively low inflation environment, a low fiscal deficits, and also a political climate which actually encourages long-term FDI. Given that we'll have a balance of payment deficit going forward for a number of years, we need to have long-term funding. We can't get away from that reality. Now, whether it comes through in the form of IMF or other multilateral agencies, or what would be preferable would be direct foreign investment. What we have seen is in the last couple of years a significant slowdown in FDI. Now that has a number of reasons. There's the global climate. Generally, FDI into emerging markets has significantly declined.
Confidence just got
there is, I mean, not only that, if you see the global environment, there has been a slowdown in economies. Home countries which would have been exporting investments, they have generally seen difficulties. So the investments abroad from those countries have declined. Now we are seeing some revival of that, and Pakistan would be a beneficiary of it, given the large population, given the lack of development, given the relatively large areas of potential investment avenues. But we need to create those environments. We would be in a safer, much safer position if we had that kind of environment where long-term investments could come in. Now, that will be partly driven by, as I said, political environment, safety,
law and order needs to
law and order.
Definitely.
But also an important consideration would be our economic structure. If we have a high inflation, high interest rate environment, if local investments are slow, it's unlikely that FDI will follow.
Definitely, and latest figures clearly told us that FDI coming into Pakistan has declined by over 40% in the past one financial year. It's time for a short break. We'll be talking to you about FDI and the tough policy measures. Stay with us. We're having a discussion with Mr. Nadeem Naqvi, financial analyst, and Mr. Syed Javed Hasan, CEO for IGI Investment Bank. It's time for a short break. Stay with us.